Hey everyone, welcome back to Corporate Decoder. This week we're diving into Heritage Commerce Corp's latest filing, and let me tell you, it looks like they might be trying to sneak a little something past us, so let's decode it together. Before we start, if you enjoy getting the real story behind corporate moves without all the jargon, make sure you hit that subscribe button. And if you want to join a community that dissects these reports with us, there is a link to our Discord server in the description below. Alright, so Heritage Commerce Corp, the parent of Heritage Bank of Commerce, dropped some news on the 23rd of October. They announced their not yet final financial results for the third quarter of 2025. That's the period ending the 30th of September, and also for the first 9 months of the year. Now, the key word here is preliminary, which means these numbers could still change a bit when they release the official final versions. They've attached the press release and an investor presentation to this filing, which gives us a glimpse into what they're saying to investors. Normally we dig deep into those numbers right here, but because they're marked as preliminary and intended as furnish rather than filed, we'll focus on the other disclosures in this report, as they're designed to be more of a summary and less of a deep financial dive in this context. Now let's talk about shareholder returns. On that same day, the 23rd of October, the company's board of directors decided to give shareholders a little something back. They declared a quarterly cash dividend of $0.13 for every share of common stock. This dividend is set to be paid out on the 20th of November, so if you own shares on the 6th of November, you'll be getting that payment. But it is not just about giving out dividends. They also made a significant move with their share repurchase program. They've doubled the total amount they plan to spend buying back their own stock, increasing it from $15 million to $30 million. This program, which started back in July of last year, is now also extended to keep going until the 31st of October of 2026. And they have been actively buying back shares. In the second and third quarters of this year, they spent $4.0 million to buy back over 439,000 shares. They bought these shares at an average price of $9.22 each. With this increased authorization and the shares they've already bought, they now have $26.0 million left to spend on repurchasing more of their stock. This signals that the company believes its stock might be undervalued, or they want to return more capital to shareholders through buybacks. They attached this press release, which, as we mentioned, details their preliminary third quarter and first 9 months of 2025 financial results. And here is the investor presentation for the third quarter. This is usually where companies try to put their best foot forward, highlighting positive trends and explaining any less positive ones with carefully chosen words. Because these are preliminary and furnished, we won't treat them as definitive, but they offer a corporate perspective on how they're framing their performance. This is another press release, specifically announcing that $0.13 quarterly dividend we talked about. It's good to see the company consistently returning value to its shareholders through dividends. And finally, the report is signed by Seth Fonte, the Executive Vice President and Chief Financial Officer. This is standard practice, confirming the accuracy of the filing to the best of their knowledge. So, what is the story here? Heritage Commerce Corp is signaling confidence in its financial health by both increasing its share buyback program and continuing its regular dividend. The increase in the buyback authorization from $15 million to $30 million and extending the program suggests management sees value in repurchasing shares, potentially to offset dilution from stock options or to boost earnings per share. The consistent dividend payout further reinforces this picture of stability and commitment to shareholders, while the actual financial results for the quarter are preliminary. The actions taken by the board paint a picture of a company focused on capital management and shareholder returns. However, it is always important to keep an eye on those final numbers when they're released to see if the preliminary results hold true, and what that means for the bank's actual operational performance. Remember, preliminary always means there is room for change, so we'll be watching for the finalized report. Now, let's talk about what this all means. Issuing dividends and buying back stock are generally good signs. It means the company is profitable enough to do both and management believes its stock is a good investment. Doubling the repurchase program suggests a stronger belief in the company's future value. The fact that they've repurchased stock already also shows they are actively using their buyback power. The risks here, as always with financial institutions, could involve the broader economic climate, interest rate changes, and the health of their loan portfolio. We'll need to see how those preliminary numbers, when finalized, reflect on these external pressures. Overall, Heritage Commerce Corp appears to be in a phase of returning capital to shareholders and signaling confidence in its future. The key going forward will be the finalization of their financial results and how those numbers hold up against market expectations and any economic headwinds. Alright, that's our decode of Heritage Commerce filing. What do you think about their capital return strategy? Let us know in the comments below. If you found this breakdown helpful and want more straightforward corporate analysis, smash that like button and subscribe. Don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.